Hey everyone, Palantir CEO made some pretty shocking comments in an interview on CNBC. Of course, Palantir CEO Alex Karp is no stranger to making shocking comments, but these comments especially were interesting to me, and I thought I'd make a video about it because they were of such interest given the situation that Palantir stock is in. These comments were a little bit surprising to me. Still, I thought they were interesting and curious to be sure, but let's dig into these details and let's see what these comments were.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, Palantir CEO saying that I love burning the short sellers. He said on CNBC's interview, Money Movers, almost nothing makes a human happier than taking the lines of cocaine away from these short sellers who are going short on a truly great American company, referring to Palantir as a truly great American company. Not just ours, but just love pulling down great American companies so they can pay for their cocaine. Wow, shocking comments here from the CEO of Palantir stock. Of course, CEOs throughout American business, publicly traded companies, dislike short sellers. To be sure, they don't like short sellers. And Palantir is no exception to that rule, although not every company, not every CEO goes out and publicly berates short sellers in this way, especially considering the position that Palantir is in. Still, the company shares short as of February 9th were 97 million shares short. The short ratio is 0.95 and the percentage of short float is 5%. If you're unaware of what short selling is or shares short, it's the number of shares that people have bought with the hopes of the stock price going down. So short sellers are betting that Palantir's stock price is going to go down. They will make money if Palantir's stock price goes down. So in a sense, they're rooting for Palantir to fail. They're hoping for Palantir to fail. And you can understand why Palantir's CEO is offended by them, is angry with them, and wants to take away their money that they use for illicit purposes, according to Palantir CEO. But shares short don't really impact a company's day-to-day business. They don't really determine if you succeed or fail, right? If you fail, they will win, but they don't make you fail. Short sellers won't make you fail unless you're extremely leveraged and exposed to refinancing risk, or you need to raise money because you're short on money. And then when you go out to sell your stock, you can't sell your stock because there's so many shares short. You're selling them at a lower price, and so it's hurting your ability to function as a business. But Palantir's not in that position. Palantir has $3.67 billion in cash and short-term investments and zero debt. It's in no shortage of cash. It doesn't need to go out and raise money. It doesn't need to go out and sell its stock. So if its stock price is lower, it's not really hurting its business. It's not really hurting its ability to function, especially considering that not only does it have $3.674 billion in cash, but it's comfortably generating strong cash flow from operations. 301 million in cash flow from operations in its latest quarter. It's been positive in cash flow from operations going all the way back to early 2021. So every quarter it makes more and more cash. It's not going negative in this metric, it's going positive. So it has more and more cash. So if it's really upset with short sellers, and I'm sure Palantir is aware of this strategy, they can go out and buy back their own stock, thereby reducing the number of shares outstanding and thereby hurting short sellers even more, because that would mean the stock price would have upward pressure. And if the stock price moves up, short sellers lose money. They make money if the stock price goes down, but if the stock price goes up, they lose money. So Palantir could just go out and buy more of its own stock with its cash hoard and thereby really punish short sellers. That's why I said I'm curious why Palantir is taking this strategy. Why not just go out and buy back your stock and really put the hurting on short sellers if that's what you want to do. And if you're really confident in your business and its prospects, then that's really the strategy to take when you're trying to fight off short sellers. And this reminds me of when, the days when before I came into investing, I was a professional poker player, and you always had players that would come in that, they weren't great poker players. They just came in on a weekend. Maybe they just wanted to spend a few hours, play some cards, and then, pass the time, right? They're not great poker players. And professionals can identify these recreational players very easily, right? And the number one thing that you don't do to a recreational poker player that's come in to just spend a few hours and lose some money at your table is berate them or tell them that you're not happy with them or you're angry with them because they're not playing poker in the right way or they're not doing what you think they should be doing. That's the last thing you do. What you do is you proceed to play good poker and win money, and thereby benefiting from your opponent's lack of good play, right? So in this analogy, the short sellers, according to Palantir CEO Alex Karp, are the ones that are not doing the right thing. They're being short-sighted and they're betting against an American company that's a truly great American company, according to Palantir CEO. So the right strategy, if that's what you believe, is to go out and buy your stock and to continue to outperform in terms of your business performance, and then use that cash and buy back your stock and just make money off of these short sellers and really cause them harm if that's what your intent is to do. Not to go out and tell them, hey, you're making a huge mistake here by doing this, and trying to talk them away from coming and shorting your stock. So that's a little bit of an interesting comparison that came to my attention when I saw this, and I noticed this comment from Palantir CEO. It's truly, it was surprising to me. I couldn't understand why the CEO would go out and make these comments, especially, Palantir stock is not cheap. It's trading at a forward price to earnings of 63.67. So it's not like one of those stocks that's not getting respect from the stock market and the price is, trading at a cheap valuation, one that doesn't reflect its excellent prospects, right? I feel that Palantir is getting the respect from the market. It's trading at a forward PE of 63.67. It's, richly valued. It's valued at the most expensive according to this metric going back all the way to last year. Of course, I upgraded Palantir stock to a buy in late 2023. I said the stock is a buy because of its excellent prospects that I highlighted earlier in terms of increasing profitability, increasing cash flow, its position as on the cutting edge of artificial intelligence and all that. So these comments were, as you could tell, surprising to me, to be sure, and I was caught off guard with them, certainly, and I thought it'd make an interesting video to evaluate why the CEO would be going out and making these comments. Overall, if I was a shareholder, I don't own Palantir stock. I do recommend it. I still have it recommended as a buy. But if I was a shareholder, I wouldn't be happy with the CEO going out and making these kinds of comments. Instead, I would prefer the CEO just go out and buy back the stock. If you think the stock is undervalued and the short sellers are making a mistake by selling short the stock, just quietly go out and buy back the stock. Use your hundreds of millions and billions of dollars you have and go out and buy the stock. Take action. Take action to prove that you truly believe the stock is undervalued in a way that really benefits shareholders, because that way you actually get more shares, you reduce dilution, shareholder dilution, and when profits continue increasing, shareholders benefit from an increasing earnings per share. All of this talking doesn't really help shareholders, in my opinion. So I would not be happy with that move here from the CEO. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.